just reintroduce myself from earlier. Mark Hannigan, Greenbackers partner. I run the US North American operations. So I know everyone's a little bit PowerPoint fatigued, but no, your eyes are not deceiving you and you're not losing your marbles. Greenbackers are pitching at the Greenbackers event. That is what's actually happening here, yes. So I'm not going to do the video again. We've already seen that. But I'm delighted to pitch on behalf of Robert, Andrew, and the rest of our team. What I will say, though, whilst not playing the video, is that we are a purpose-led organisation, and I think that's very, very important around what we do and what's in our DNA. Greenbackers have been doing what we do for a very long time, but it's nice that what we do is finally in vogue, so to speak, because for a long time, when Robert was doing the hard yards that built our brand and built our model, clean tech investment was not an easy sell. It's very much of the moment right now, though, I'm sure you'll agree. So much so that it led Bertrand Piccard, I think, at COP to say that the economy is now ecology, or maybe it was ecology is now the economy, which, how does he say it? Can you remember?
We need to reconcile economy with ecology.
That's it, yeah. Thank you. We're mission-led, and our mission is to be the premier clean tech investment early stage advisory firm in the world. That's what we think we are, but we want to get even better at it. The problem slide we've already shown, but I think it's worth taking a moment to explain it again. I think unlike all the other ventures that are pitching today, everybody in this room inherently understands what we do because you're here. So by definition, you understand what we do, the problem that we solve. But it is worth labouring because as clean tech as an asset class gets bigger, this problem exacerbates. Once businesses get to Series B, Series C, D, IPO, private equity and beyond, in the fundraising part of those phases, everybody kind of knows what they're doing. You know, there are investment bankers and there are lawyers and the team on the selling business have an M&A department and everybody knows what they're doing. When it's early stage seed and Series A, they kind of don't. And it can be chaotic, actually. It can be chaotic. You know, these amazing founders in the room who are chief cook and bottle washer and then have to worry about going and calling in investors and finding investors and we try to bring order to that chaos here at Greenbackers and make the process for the founder as efficient as possible, allowing them to focus on building their business. That's what we do for the founder. For the investors, as clean tech becomes bigger and sexier and ESG is driving more of it onto the agenda, investors are just overwhelmed with pitch decks for clean technology. We hear it every single day. Pitch deck fatigue, teaser fatigue. And what we try and do for the investors in the room is we do all the grunt work. We separate the wheat from the chaff. We present you with pre-screened, curated and investable businesses. That's what you're seeing today. And to produce the 16 that we have today, believe me, we have looked through hundreds and hundreds of applications to present you with the best of the best. So that's the problem statement. I just wanted to reiterate that. On the solution side, hopefully you've gathered by now, we try to take all of the pain out of that process for both sides to, as efficiently as possible, connect the right ventures, the right opportunities with the right capital and the right investors. It's not easy. The way that we do that has evolved quite significantly over the last few years, I think it's fair to say. We were originally, those of you who were at these events pre-COVID, we were very much an on-premises event business. And this was the main thing that we did a couple of times a year. COVID forced us to go online, go digital, go virtual, which was actually more by accident than design, really good for our business. And we've built a pretty phenomenal digital channel that we keep talking about, the deal room with 340 odd VC funds in there. And the model now is very much VC funds can consume the opportunity, the pre-screened, curated, investable opportunities on an on-demand basis, wherever they are in the world, on their tablet or their phone, do a little bit of diligence in the data room, and then once they've shortlisted the ones they like, come along to one of our events and meet the founders in the flesh like you're doing today and like you're doing at the networking event after this. So that's our hybrid model, digital plus on-premises. We think that streamlines the investment decision process for investors and reduces the amount of time that's wasted by founders. So the why now, I'm not going to labour this. I think everybody gets the macro factors that are driving why clean tech's so important for the COP26 commitments that governments and corporations have signed up to, and that ESG sentiment is driving where capital is going. An interesting recent development, two recent developments actually, that people have talked to me about today are, one, the oil price is back up, so surely that is a bit of a headwind for clean tech investment and advancement. And to that I would say no. You know, I live at the coalface of the oil and gas industry in Texas, and what's actually happening is that big energy companies are using the profits from the current high barrel price to accelerate technology development in clean tech so that they can accelerate their transition to be all energy companies. So actually, energy companies cutting purchase orders for demo projects is something that was just not happening a year ago. But now energy companies have budget to do demo projects and proof of concept pilots. So things are actually accelerating. Second thing I would say is that traditional software-based VC is going through a bit of a hard time right now. You might have read that in the press. You know, they've had a 10-year run of very generous to founder investment terms. That's kind of come to an end. So funds are looking for different sources of alpha, and clean tech is in favour. So on top of all of those reasons, there's two other reasons that now is the time. You've probably heard the phrase, it takes a village to get something done. Well, in clean tech, it really takes a village. I think we can testify. We live at the epicenter of this fast-growing ecosystem. It's not just about investors and ventures to get this done. We need people like our service partners, Withers, Solar, Impulse, Corpay. We need lawyers, we need service providers, we need banks. We need academia, we need big corporations, we need government. So it really does take a village. Thankfully, we are at the centre of that village. That's a position we have earned over almost 15 years of doing this. And there are many new entrants into the space. You know, 5 years ago, net zero consulting or early investment was not the first thing that someone from Ernst & Young or KPMG would talk to you about, but it is now. And we like to think we beat those guys hands down every time with our unique model and our personal touch and our pricing, let me add. That's a big challenge, you know. Every venture in this room is, to use a Scottish parlance, skint. You know, every penny is a prisoner. Greenbackers is very aware of that, and our pricing strategy is catered for people raising seed and Series A, where every penny is a prisoner. Okay, the market. I'm not going to spend too much time. Everybody's ready for a beer on the market, but I think everybody understands. Billions of dollars piling into clean tech now. Assets under management have doubled in the last 12 months. About 20% of that is allocated to seed and Series A, where we live. Huge market, $500 million opportunity. Another thing I wanted to touch on was our screening and curation process, because it's a huge part of our USP, and we've got really good at it. There's a lot of tech involved in how we do that. It's multi-phase, but I think hopefully today and all of our events in our deal room are evidence that It allows us to really quickly identify the cream of the crop and present them in an easy to digest manner. I was looking at our deal room and I was looking at the running order for today, and a phrase that my son uses, 14-year-old, for contemporary music came into my head, which I believe is all bangers, no fillers. So I think that's a compliment to the ventures that are in the room. At least I think that's what it means. And, we touched on our track record of success too. We're not just talk. We get this done. We have a long, successful track record of helping people like you guys find the capital you need right across the sustainability spectrum and across multiple regions too. We're absolutely a global player in terms of where the deal flow comes from and where the capital comes from. And we're delighted about SwissVault, our latest score on the board. We're very, very proud of that. The short version is SwissVault's technology helps reduce the amount of energy that data rooms consume. So the data rooms where all the cloud servers are for AWS and all those guys, they consume an awful lot of energy. SwissVault's technology reduces that energy bill. I believe the investor for SwissVault is in the room. Should we call that out too? Indranil, is that okay that I do that? Yeah, okay.
Oops, too late.
Oh, okay. Yeah, too late. Yeah. So a little bit more insight into what we do. After all, we're pitching for investment today. We've got 3 revenue streams and a 4th one planned. We're a traditional advisory. We have a growing buy-side advisory service. I won't talk about it too much right now, but big industrial corporations are struggling to identify, curate, and adopt emerging technologies, and more we're being asked by big energy corporations to come in and help them understand the deal flow, the pipeline, which technologies are right for them. So buy-side is a growing space, and events like the one that you're at here today. We do see a natural evolution of Greenbackers to our own pool of capital, where we will anchor some of the deals that we're bringing to these events. We're not there yet. That's not something that can be done in a hurry, but it's on our horizon as part of our strategy. This is the immediate historical financials and the immediate forward look. What I would say about what we're doing is, so we're not an immature business. Our business model is very, very proven. We have bootstrapped the business as a founder group and find ourselves in a place where demand is outstripping our capacity, and we could do much more for you guys and much more for more ventures, but we need growth capital to help us with that scaling. So what we're talking about is a very proven business model in a market with a very strong tailwind, with a business plan of how we can put a modest amount of capital at work to 4x, 6x, 10x our revenues. I just want to say a couple of things about the team. This is our secret weapon, in my opinion. Passion, experience, humility, and humour are all hallmarks of our culture.
That's just me.
That's just you, yeah. And it's certainly why I work here. It's the team. I mean, I love the ventures and I love the investors, but our team is why I'm part of Greenbackers. That's our secret weapon. Just some quick key stats for the data people in the room. So this is about the size of what we're doing. When you remember back to the market sizing slide, we are barely scraping the surface. We have investors registering for membership of our deal room every week. We're up to 340, and it's because they can't get curated top quality deal flow efficiently. They don't have time to look at 800 decks a year to invest in 13, or to take 13 to investment committee to get 4 passed. They need help, and we have the solution. It works. We just need to scale, so we need some capital. So specifically, we're looking for $750K for a 20% stake in Greenbackers. We have a very strong interest from a lead investor. There is some headroom beyond that lead investor's interest. the opportunity does qualify for EIS, we will be using the funding for a combination of human resources to increase our back office capacity, technology. A lot of what we do is already backed by technology, but we think we can do even more, smarter, better analytics for our ventures, better analytics for our investors. Yeah, so that's how much we're looking for. I know everybody's ready for a break. So, you know, we've kind of become the shoemaker's children, where we've run around helping all of you guys find new shoes, and we've looked down and realized we need some new shoes ourselves to keep doing this. So we would appreciate your consideration. We're all happy to talk about the opportunity in the break room. Thank you.